Welcome to our practical application about the bullish engulfing, guys. Yeah, it is time to go in the chart, right? We had the full theory about all about the bullish engulfing. Let's start how to find this bullish engulfing, and also how to use or how to use option 1, 2, and number 3 in trading. Okay, in real trading. Let's go, guys, for the first option 1. Remember, check. Bullish engulfing key takeaways must be met. Okay, let's go here, guys. It is gold, right? Still gold. And here we have this candle, right? Give me a second. Let me. Okay. Okay. Key takeaways must be met. First one, a little bit more in details. Position, right? We need it in the low, lower low, high, or higher or higher low. We need it in this structure. Let's check where we are, right? And this is very easy, guys. All of you are advanced. We are in a still downtrend, and this is a lower low. Perfect. First one, position is correct. Next one, lows and highs. Must be engulfed on the same level or lower than the previous candle and closes higher than the previous high, right? Let's check this one here. Zoom in for you guys. The low is definitely lower than the previous candle low, and the high, the close, sorry, the close is definitely higher than the previous high. Easy. Boom. Number 3, structure. Bullish engulfing candle completely engulfs the entire range of the first one, including the wicks, and the close is higher than the previous high. We include also the wicks here, right? The close is above, everything is fine. It is definitely in here, for example, right? I added here a gap open a little bit lower, but in this case, it's not a gap open, it's completely on the same, it is on the same level here, right? But important is to trade below, right? First below in the morning, the bears are the winners, and at the end of the day, the bulls are the winners. Good. That is number 1, 2, 3. Let's go to buy action, right? You will go first. You will use this information, and then we will go into the key indicators. Okay, I will add this in. Let's go to bullish engulfing option number 1. Bullish engulfing key takeaways must be met. Done. Number 2, as soon as a bullish engulfing is completed in respective time frame, we mark the bullish engulfing high and low. This is also done right here. The high 1351.6 and 1308.7. Number 2 is also done. Number 3, the entire long order is set slightly higher than the high to avoid possible fake outs. That means what we have to do on Friday, right? Or on Monday, or no, Friday. Friday at around midnight, we close the candle here, right? That means next morning on Monday, because it's a weekly chart, you see, okay, this is it's only possible if you to mark the highs and the lows on Monday for a weekly chart, right? Then it's completely then we are closed completely the candle. On Monday, you see, okay, we are starting here, right? Okay, this is the opening here. Good. That means I will use an entry slightly above, all right? Slightly higher than the high from the previous from the bullish engulfing candle. Means our high is 1351.6. Our entry is 1352.4, for example. To avoid fake outs, you can move it also a little bit higher, right? It's up to you, not right, not wrong. And then we will add a stop loss, minus 33, minus 33%, right? That's not correct. I had to use, should be here, right? Then your entry is here, means your stop loss is 1,298. 1,098, because you increase your zone a little bit, right? Because your entry is above. Perfect. And that's it, right? That's it. Then you will wait. You will wait that you're filled, right? And next week you're not filled. Next week not filled. Not next week not filled. Next week not filled. And then here, look at this. This candle after 1, 2, 3, 4 weeks, we are filled, right? Let me zoom out. We are filled with this candle. We traded above our hammer, our bullish engulfing candle. Nice one. Back, right? A battle between buyers and sellers here. And then look at this. The buyers are the winner, right? Perfect. Very, very, very easy. Let's add here the first indicator, okay? And you'll choose the seasonality. Let's go into the seasonality here. You see the 8 years is a little bit far away, right? And that's the point here. Let me go into our seasonality chart and yeah. Look at this. This is a wait, what is it? Like this. Seasonality chart. It is the same like in the slide, right? See, current price here, and we expect more weakness in the next days. The next buying point is here, right? Check the gray line. This is our seasonality chart. Means this is definitely not the best entry, right? It is not the best entry for us for option number 1, for example, for long above, because seasonality tells us, okay, this is a bullish engulfing candle. Seasonality tells us, okay, expect more weakness till the 23rd. Expect more weakness. And that means we have to expect more weakness around here, or let's choose this one. It's not important. We have to expect more weakness with the seasonality chart till this date. That means, okay, maybe option number 1 is not make not really sense here, right? Let me remove this one here, and let me check. That means here, option number 1, you could also wait, right, before you set your entry till this one here. This is a buying point, right, from the seasonality. Wait here, and then long above, also fine, right? Wait for the set. But what we're gonna do is we can use option number 2 for this perfectly. Okay. It means let's go into option number 2. We will talk about all of this. Okay, fine. But I will show you what is the decision process to find the best option, trading option. Option number 2. Number 1 is the same. Number 2 is the same, but number 3 is important. Long within the range. Okay, that means you're long X. Could be or should be color green, maybe. Let me fill color green. Boom. Not so smart. Because we have green candles. Let me add this one. We go back to yellow. Okay. Means option number 2, right? Remember, also the same on the hammer candle. We want to we want to enter the trade in the entire range between the high and the low. And here we can use the seasonality information, right? Means, okay, we got a bullish engulfing. That could be a nice bullish reversal, but the entry right now make no sense with additional information from seasonality. Means here we have this buying point on the 23rd. We add around the 23rd. You can change this also on daily time frame. Right here, it's easier then, but I want to stay in this in the weekly time frame. Here you can see the bullish engulfing. Okay, means here 23rd is around this one here. Okay, that means wait for the seasonality buying point and then check where you are, right? Where you are, and you see on the 23rd around, right? Or let's check 1 week, before we're talking about this candle here. Okay, means, okay, enter in the entire range here, and on around the 19th of December we are here, means enter on the close, right? Boom, market and long order, and look how to increase or decrease your zone and increase your reward with option number 2 and the additional information of the seasonality, right? That's crazy. Okay, that means this could be your entry, or here lower, right? That means for me, I only work with targets, right? And if you have a target around, I don't know it, for example, that let's check, not example, let's check where should be your target. Your target should be around this area here, right? Without the seasonality information, then you are talking about downtrend continuation. But if you see the seasonality, this is one of the best buying point. You want to stay in this trade, right? Definitely. That means, yes, we can break the highs. Means my first target, and then, oh, sorry, I expect a correction means after we break the highs, okay? And that means I want to need a 2 to 1, 3 to 1, 4 to 1. Okay, then check where do you have to move your line, your entry, right? With this stop loss to get the 3, 4 to 1, up to you. And then you can also try to have always an eye on the seasonality chart, and then boom, enter here on the next day with the opening. It's also fine, right? Remove this one. Plus, wait, you can enter here or the whole wick to the downside, market long, stop loss here is fine, or wait for the next day opening, right? That's here, boom, or in the, I don't know, around noon, for example, enter here. It's fine, up to you, but definitely you have to enter, right, in the range here, and with the stop loss below, you have to enter. Nice buying point. This is option number 2. Here, guys, as I said, we're using the stop loss below the engulfing candle, right? And look, reward, you increase definitely your reward. Trigger probability is less, right? It's less. Maybe we'll see we will see that price never comes back into the zone, but here, perfect, it's working nicely. Let's check also another indicator here before we start with option number 3. Means we talked about the seasonality here, and now let's talk about valuation. And guys, you see here specific valuation asset located in the bullish area. It's a weekly time frame, and you see, guys, the US dollar is still bullish, right? That means seasonality is not ready, right? But the weekly bullish engulfing is ready, and also the US dollar is ready, right? Is definitely ready. Perfect. Another one is COT. COT was on this date super and the extremes bullish. Means, okay, seasonality is not ready. Bullish engulfing ready. Valuation ready. COT extremes ready. Okay, perfect. or not perfect, but really good. Okay, not perfect, but really good. Okay, we will discuss the trading day of the month in the last option here, option number 3. That means we will check the lower time frame. Okay, and that means remove this one, and here. That means we will check this bullish engulfing candle on the lower time frame. And here I choose the daily time frame. Okay. Here choose the daily time frame. And 1 second. Come on. We double check. 1347. Yes, it's close to the zone. 1304. Yes, like it is like the same here I used. Give me a second. I want to be sure that is same entry. 0, no. Okay, snap mode. This is correct. And this one is correct. That's the same here. It's the same. Look, the high, the weekly bullish engulfing high, the bullish engulfing low. Perfect. So we step number 1, bullish engulfing key takeaways must be met. Yes, on weekly. Number 2, as soon as the bullish engulfing is completed in the respective time frame, we mark the bullish engulfing high and low. Done. You can do this on the weekly chart, and then you can go into daily chart, right? And then number 3, the entry long order can be made market or as a set within entire lower time frame demand zone of the bullish engulfing. Let's check this one. Okay, means this is the bullish engulfing. And let's check where's our next demand. Where's our next demand? Let me draw it. I want to change this one a little bit. Transparency 5, 5. Okay. So that means where's my next demand here, for example, on daily? And this here, right? I have a wick over wick or a drop base rally, correct? This is our leg in, a drop. This is an indecisive candle, a base, and a huge rally. Perfect. Means this is my demand. Okay. Means I want to trade this one here. This means option number 3. I'm looking for demand, and this is my demand area. I want to go long here. I can use the proximal line here, right? 1327.8 on the wider version. Of course, we can also use the preferred version, right? Up to you, up to your profit margin. Let's take here for this example no, what is it? The preferred version, okay, means this will be your entry. Color, it is not possible. Wait, make it possible. 0, change this to green. Yes, perfect. Means this is your entry. The next time, if we come lower, right, and this is this candle here, let me in. The next time, if we hit this line here, then we are long, right? We have filled our order. Means on this date here we are long, right? We are long. That's our trigger. And then look at this. Got a reaction deeper inside, and then we got the nice drop, a nice rally here to the moon, right? To the moon. Look at this. To the moon. Good job. And you see here, you increase your profit margin, right? A lot. It is less than 50%. Let me change this to 33% from here, because you can use a stop loss below the lower time frame zone, demand zone, or a stop loss below of the weekly. That means you can, oops, that means you can use also still this stop loss here, 1000 on weekly, 1294.4. This is a bullish engulfing weekly stop loss, initial stop loss, or you use the stop loss below the lower time frame zone, plus 33%, 1303.5. Good. Let's check now our last indicator. It is a trading day of the month. It is good enough. Yes, I think it is good enough. Check how I want to show you. First one is, right, if we talk about seasonality, the best buying point would be the 23rd, right? Let me mark the 23rd. This is this one here. Okay, 23rd. This is this buying point here. And look, we are too late, right? We are too late, or not too late, but this entry here, you missed it. If you use only option number 3 without the seasonality, for example, then you get definitely a better entry than this entry here. But let's use the trading day of the month, and for this we have to start here. Look, it is a 1, 2, 3, 4, 5, right? The 5th day is this one here. Let's open it. So that means the 5th trading day is our bullish engulfing. Okay, the 5th trading day, that's here. You see, and check only row number 1. Okay, this is a December. It is not really strong. It is more weak, right? On 5, on 10, and also on 15 years, more weak, not really. Means, okay, maybe this is not the best day to enter. Let's check number 6 and 7. They are super strong. Make no sense to enter on the 6 or 7, right? They are super strong, and you can see this also. Let's open this one here, then more weakness, and that's fine, right? We see more weakness, 33%, 8, 9, and then 10 is strong, 8, 9, 8, 9, weakness, 10 is strong again. And then here, look, check always the trading day of the month. It's possible to, yeah, for you, if you have this indicator. You see, it is not easy. We have not like a cluster of it, right, to find the best entry. It is like green, two green, two gray, 1 green, 2 gray, 2 green, 3 gray. It is not like a cluster that we have here in row number 2, for example. Row number 2 is on next month, means January. What is the result of the trading day of the month? Means we have not really not really a cluster of several days. Means we have to expect bullish and bearish candles, right? And that's exactly what happened. Look at this bearish and bullish engulfing, a clear fight, right? It's not a clear direction. But what you're gonna do to expect is, if you check row number 2, row number 4, row number 6, and this is January next month, that showed us that we have a cluster of green candles. 1, 2, 3, 4, 5 days. 1, 2, 3, 4 days. 1, 2, 3 days. And then here, 3 days more, 3 days more, right? That means, okay, so January will be super strong. I want to be, yeah, I want to be, I want to stay in this trade till January, definitely, right? And the seasonality make also absolutely sense that we see a strong January, right? It means here, use the information at the trading day of the month, and you see here, okay, it's not really clear. And I told you at the beginning in the theory, guys, I want to show you not the picture perfect samples here, because trading is, if we have 10 zone qualifiers, sometimes only 6 or 7 are aligned, right? And that's real trading. I will show you seasonality was not ready. The valuation was ready. The CUT was extremes ready. Trading day of the month is not ready. And this is trading, right? Here, that means expect ups and downs. Okay, means okay, ups and downs means maybe looking for more unfilled buying orders, and I have unfilled buying orders here in this demand area on the lower time frame. Option number 3 means yes, it makes absolutely sense that we see strengths and weakness, and here that this happened, right? That we see weakness and strength and weakness and strength, all the wicks here back into the demand, more unfilled buying orders, right? More unfilled buying orders. And then we got the strength, boom, started from the 23rd is with the seasonality, sorry. With the seasonality here, this is a nice buying point, and you have the opportunity to already filled with option number 3, or of course option number 2, and that's trading, right? Combine the all the information of the indicators, the technical analyze, all of this. Yes, and then you can increase your profit margin. And yes, of course, where's your next target? You can use seasonality, you can use a fixed target, or of course, if we have if we have a cluster of weakness for the next months, right? We definitely want to stay in this trade in the next months. This would be your short. Let me check. It is the 26th of February. Let me change this very quick. Then I will show you studies also. Yes. February and then January. Give me a second. I will move my radar screen. Second. Yes, that's nice. I'll show you this. Make a screenshot. Okay, not possible right now. But yeah, you see, if you open the trading day of the month for for the February, you see end of the month a cluster of what is it? A cluster of bearish days. Okay, it means you can use this also as your exit. Great, guys, that's it. I hope you understood all the bullish engulfing trading opportunities, right? With all the indicators. Hope this is helpful for you. I know for the most of the students, it's a little bit tricky to combine, to use all the informations as the trading and technical and fundamentals. But yeah, I hope it is helpful. Same like for the hammer candle, it's everything. If anything not clear, let me know. Okay, write me a message. The online trading campus homepage, and I will include also a FAQ. At the end of all this price action stuff here, I will I will record also a live no, I think not live, advanced session, how to anticipate some reversals and so on. Okay, good. That's it, guys. Thank you so much. I hope it's helpful for you. Bye bye.